Hi, everyone. As we close out 2024, I thought I'd take a quick run through the worries and expectations of our talking market guests to kind of pull together some of the common threads and differing opinions. 2024 has been a banner year for many investors with huge inflows and record gains. Some are optimistic that the underlying fundamentals can extend the good times into 2025.
The market's going up, Maggie, because the market is excited about shit. Right. And it's like, I kind of beat up on a guy that was like, yeah, the market's rallying for no reason, the no reason rally market. And I'm like, are you kidding me? Like, no reason. We're in the age of artificial intelligence, nuclear power. We're going to make the country healthy again. We're going to war with big food and seed oils. You're like, nothing going on. Everything is going on. You know what I mean? Like Elon Musk bought Twitter and saved free speech. Like, there's a lot of good shit going on. So I think that's why the market can get excited.
I've been talking about this decade being the roaring 2020s, productivity-led growth based on technologies that are out there that are enabling companies to increase their productivity, which means they're cutting their unit labor costs. So unit labor cost inflation is down, means it increases their profit margins. And it also allows wages to rise faster than prices. So as I said, productivity is absolutely fairy dust. And this is not really a forecast anymore. It's really a description of what's been happening for the past couple of years.
But for every bull I spoke with, there were plenty of others who worry that sentiment has run ahead of reality.
Buffett's not an idiot. I think Buffett expects a big correction, a large correction of 20 to 30%. And I tend to agree with Buffett. I saw an interesting chart the other day that said that U.S. market cap is now 48% of global market cap, right? So we have basically half of the market cap of all equities globally, right? You remember the last time that happened? Japan in 1990. And it really like, there were similar narratives, like there's this narrative that the U.S. is superior and we have all these tech companies and we have capitalism and like we're better than everybody else. Japan had all the same narratives in 1990. They figured it out. Like they had manufacturing, they had electronics, they had, So things can change on a dime is all I'm trying to say.
Are you worried about leverage in the system, Tommy?
Oh my God. Of course I'm worried about leverage. I wake up in the middle of the night and I scream. No. If you want, you go look at Thomas Petterfy of Interactive Brokers was on a video. I think it was CNBC or one of them, and it's online. You can see it, and he said the margin balances are 17% higher. People buying today are going to be future sellers. They're not holding Tesla for the long haul. They're holding it, for a day, 2 days. It's a casino. I mean, we can trade stocks during the week and we can gamble on sports during the weekend. It's a casino world that we live in.
A concern that came up again and again in conversations. There are big problems that need bold solutions, but politicians, policymakers, and investors are afraid to face the hard truths.
No, I think lower rates makes it worse. Look, there's a lot of bad commercial real estate. There's a lot of bad office properties. It is time that we understand that they are bad and they get restructured. And if the answer is whine like a 5-year-old to give me zero rates so I can keep this crappy property alive for another 2 more years, that is not doing anybody any good.
At the end of the day, debt is running out of control. And what you need is discipline in the system. And you need discipline against prospective inflation risks. The irony in many ways is, if I was advising, incoming President Trump, I'd say what you want to do now is create a recession as soon as you can to try and get, people back into the fixed income markets. Well, good luck with that.
In plays when the plot is stuck in classical drama, you have something called a deus ex machina that comes in. It's like the rich American uncle dies and suddenly everybody's rich, or the long-lost cousin shows up and solves the plot. I think a lot of what we're seeing on X right now is like a deus ex machina, because people are realizing, okay, there is no way we're going to cut the deficit, increase growth, and get inflation back on target and get the stock market above 6,000 and somehow reindustrialize the Midwest. Like, We can maybe pick one or two of these things, but certainly not four or five.
There's a lot of optimism in the market that Trump and his team can fix what's broken, but there are no easy answers.
So for me, the macro environment is broken. I'm very excited to see Trump team coming at the helm of the US and a team that's actually willing to make changes. There's a lot of really exciting things that are being discussed for the US at least, but all of them are quite medium term, and by medium term I mean a few years rather than a few months. So I think there's a lot of riding the momentum of what might happen in terms of a brighter medium-term outlook. And there isn't much thinking going on about the price to pay to achieve that sort of macro revolution.
Can't have it both ways. It's fine. Pick your side. We're going to be friends with China because we need to be. Great. Party on. As usual. Profits for big companies hollow out the little guy. Income inequality explodes. But everybody gets cheap stuff. Lots of packaging. You press a button on Amazon, things show up. That's great. That's the estate. Go to war with China, all that's off. You just have to know that.
Are we putting on tariffs because we want to encourage business to reshore and manufacture in the U.S.? Are we putting on tariffs because we want to, punish Canada and Mexico for the border and fentanyl and whatever? Or are we putting on tariffs because they need to raise the money tax-wise for those pay-fors? If it's the latter and we're just slapping tariffs on because we're trying to raise money, that's not a good thing. The market is not priced for that scenario at all.
We don't even know what those Trump policies are, right? Some of the cabinet picks leave people scratching their heads. Some of the internal conflicts suggest that we could have another 4 years of chaos associated with the administration. We just don't know, right? We genuinely don't know. And so to see that up against all-time highs in valuations, et cetera, to me is, one of the most concerning things that I can possibly be thinking about.
If there is a consensus, it's that 2025 will be a year of disruptive, volatile change. We're all going to need to stay sharp and lean in if we're going to manage the risk and take advantage of the opportunities out there. And that's what we'll be doing at Talking Markets. By the way, not to get all inside baseball on you, but since we started Talking Markets in September, we've gone from 0 to 10,000 subscribers with over 600,000 views and more than 130,000 hours of Talking Markets watched. Pretty happy about that. So a special thanks to all of the Talking Market guests who've joined us, and a big thank you to every one of you who subscribed and is on this adventure with us. I appreciate your tremendous support and know that together we can navigate whatever the global economy throws at us. Happy New Year. We'll see you in 2025.